Good morning, good afternoon, good evening, and good night, friends and colleagues from across the world. Welcome to our second weekend of the kickoff of the Podinar season for 2021. Today we will start with a special edition Podinar, which I've been looking for very quite some time now. And we will be hosting Dr. Jeremy Krell on the topic of the first venture fund for oral health. Dr. Krell, thank you for joining us today.
Thank you for having me. It's a pleasure to be here.
It's a great honor to have you. You are a prime example of what a doctor can achieve outside of our clinical practice and business and commerce, and I will take some time to introduce you. But before we get to that, Dr. Krell, you're going to briefly take a look at some housekeeping stuff so our viewership has a means of navigation through the scenario. First and foremost, friends and colleagues, please join the doctor-to-doctor movement. And the way you do it, you go to Top 100 Doc on the upper corner here, and you click the nomination page. And there's about a 5-minute process to fill out that will give us information that we need for the regions to select the annual classes. This is our third year of doing this. And if you see there, we have expanded into medical, pharmacy, optometry, and chiropractic, as well as philosophy. But we have closed for dental this year because in our third year, we've had 4 times the nomination, 6 months early. So we would really, really kindly ask you if you can help us with this movement that brings us together in continuing education, quality continuing education that's complementary. Brings us together and we can exchange ideas, concepts, be it clinical, be it administrative, be it financial. Another scenario on top of that page is a Podinar. We have a Podinar series that we do from May through November on the weekends. And you're welcome to come in and book. It's very simple. If you have an idea, a product, a service, technique, a teaching that you want to pass on to doctors that you believe as a doctor would be beneficial to them and their patients, please bring us your concepts. Simply book as a speaker, and you have all of the available slots on the weekends that you can click. Not as a host. We bring the host to our existing network of top 100 doctors and dream team members and regions and chairs that it's a timely process to get to that status of being a participating member. So with that said, let's take a look at Dr. Krell's overall credentials. Very unique clinician, DMD, MBA. We have the same sort of educational background. He's a general dentist with a combined business background. He's currently the head of marketing at Simplify, based in New York City, and the chief marketing officer of Brina Solution, based in Chicago. He oversaw provider and clinical growth initiatives at Quip, the oral health and subscription electronic toothbrush company, and has since built the Barchester Bay Group, a portfolio consisting of over 15 ventures, and I'll go over that particular URL with you shortly. Jeremy also practices general dentistry part-time, sits on boards of healthcare and dental startups, and is an angel investor. Jeremy has 15 plus year of a proven track record with startups through several successful multi-million-dollar fundraisers and acquisitions. Jeremy started his career with 3 web and graphic design startups and moved into a luxury good and commodity venture, Doormate, for college students. He later founded a venture incubator, CEO in Box, and led strategic provider innovation development at Oscar, a national health insurance company, following his MBA at Chicago Booth. That's a pretty good, it's a really good MBA school, actually. Jeremy lives with his wife, daughter, and a pug in Jersey. He enjoys playing and following professional tennis, having attended to all US Opens since he was born. Jeremy is a foodie and has been a vegan for 10 years before it was cool. Wow, tennis. So you probably would like it around the desert where I live, where the tennis gardens are. I'm sure you're familiar.
Yeah, that's right. And, I know we have our virtual backgrounds up, but if I could show you now on the walls in my office, I have Andre Agassi signed picture behind me, and I have to my left a one-of-a-kind signed Roger Federer print. So very, very big tennis fan.
That's awesome. It's a very good hand-eye coordination activity. Jeremy, you have at the Global Summits Institute and in our doctor-to-doctor movement, we emphasize the fact that dentists and doctors from any industry are capable of anything, that we do not really particularly need outside parties to meet our objectives and goals in our practices. So how long did you actually clinically practice before you branched out in the business world, before you got your MBA? What was the time frame there?
I've always sort of been doing both concurrently. Ever since I graduated from Tufts Dental School in 2013, and I've been clinically practicing since. On and off, more or less. Depending on the exact year and time period, but always have valued the clinical practice alongside what I've done. On the startup world.
That's fantastic. What would you recommend to a very good clinician with excellent manual dexterity and good chairside manners that can't get ahead? How do you get involved in other verticals and other ventures? And as you know, doctors many times have second skills, secondary, tertiary skills, be it being a lawyer, accountant, innovator, a manager. So what would you say to someone that wanted to up their acumen and set themselves up for a better life?
Yeah, I think the hardest part is the first part, which is really going for it, right? You got to show up. You got to decide to make that pivot or that transition, right? It's true. Dentists are they're creators, right? Inventors. You sort of in part like an engineer. So if you have a good idea, go and pursue that, right? Put a little bit of time into it. Put a little bit of money into it. Put a little bit of effort, into prototyping that and validating it. And if it doesn't go anywhere, it doesn't go anywhere. You tried, right? No regret. And if it does go somewhere, right, it's something that you did, that you built, but you really have to just, the hardest part is showing up and taking that plunge, right? And doing it, making that kind of pivot for the first time.
The first step, yes, taking that first step. And this is what we promote at the Institute for all of our colleagues. Start finding problems in your practices, in your personal lives, and take the first step and innovate and start businesses. And let's create a more self-sufficient healthcare industry as operated by doctors. So I really, really exciting what you have done with this, the first venture group for oral health. I personally have a big problem with hedge funds, VCs that come into the healthcare industry that I have no fraternity to what we do. And they play their money games, and it creates, at the end of the day, problems chairside with the patient. And it's really a cool idea to have, I think, at least 90% of the people that have that are advising you now at Revere Partners are of our own. They're doctors. Here's Revere Partner. If you guys want to go, reverepartnerscbc.com is where you can find this particular think tank of doctors and leaders in the industry. You have Kathy, Dr. Zuckerberg, numerous doctors that are highly successful. Dr. Bach, Dr. Pulver, who's very heavily involved in AI, and on it goes. So when doctors are looking at these products and services that you have, they have a quick understanding of what solutions it solves, what it could do for the patient, and what it could do for the investors. Phenomenal idea. What hedge funds and most of these other organizations don't understand is the patient-doctor relationship that goes into it. So what brought you to this idea of starting actually a fund that's operated by doctors for projects that are being made in the healthcare industry? What sparked that? Why did you get there?
Yeah, it's just kind of like you were saying before, finding a problem in your own life, right? Past few years, I've been building up my Barchester Bay Group, which you were on before. That's my management consulting firm for growth stage companies, startups, bigger companies. And, we help many companies, over 30 ventures we now have in our portfolio, raise funds, right? And they often have to pitch themselves as something other than themselves, right? They have to masquerade as a tech company or a medical device, or something other than a dental company, right? Because a dental company is not inherently understood by the institutional investor outside of our dental space, right? And so that sort of has become an Achilles heel, right? It staunches innovation in the dental space because inventors and founders are concerned about, if I put in the time, if I put in the effort, even if I put in a little bit of my own money and I ultimately need funding, I'm going to have a really hard time getting funding because nobody else is going to understand. Right. And now, we kind of are planting this flagpole in the soil in the dental industry saying, look, you have all the necessary ingredients for a plant, right? You have the sun and the water and the soil, right? And so we can grow here, we can build here. So I went over and started, Revere, really out of necessity to promote innovation within oral health.
That's excellent, Doc. I really admire you for what you're doing. You have the full support of the Institute, and we'd like to learn more. I seen a brief presentation a couple of maybe about a month ago, which was very impressive on the systematic approach that you took in going out there and finding out what these companies are investing in, then coming back and saying, "Hey, we can do this better ourselves. That will benefit our doctors better." So can you kind of lay this out for us? And I'm going to sort of disappear, and this will be, with that basically said, Doctor, you have the floor.
Fantastic. Okay, I'm going to go ahead and share my screen here and just, Kino, if you could give me a thumbs up when you can see it.
Looking good. I just full mode and we're ready to proceed. Right now we see the slides on the side.
Got it. How about now?
That's about to pull it up, and I think it should be all set. There you go.
Perfect. Okay, so Revere Partners, and thank you again for everybody joining. Thank you for taking the time to listen. Happy Mother's Day to those who are celebrating, who are mothers, or to yours. Revere Partners, right, is named, firstly after Paul Revere. Many don't know Paul Revere was actually a dentist in addition to a silversmith, right? Number two for that name is that Paul Revere did what he was famous for, his midnight run, right? You see him sort of horseback in our logo on my birthday, April 18th in the 1700s. Right? And last but not least, although I'm a New York guy, I was born and raised in New York, Revere Partners, really has Boston roots, and so do I, right? I went to my undergrad, Brandeis University, my dental school, Tufts, and lived and worked in New York, in Boston, in the Boston area for nearly a decade. So we thought that, Revere Partners would be paying nice homage to, to where we really started. So it's the first, as Kinor mentioned, it's the first independent venture fund for oral health, right? There are many institutional investors that have invested in this space. They simply dabble in the space, right? They come in, they make one investment, and then they leave. They make another investment, maybe, and then they leave. That's rare, right? But we do not have a dedicated institutional fund in this space. The general partners are two, myself and Dave Arena. Kinor did a really nice job on my background. About 17 years as a founder in the startup world, in addition to being a dentist with a management background. I've built the Barchester Bay Group, which is my management consulting firm for growth stage and early stage companies in oral health. I have over 30 ventures in there now. I've been a key operator at Quip, Simplify, Verena Solutions. I sit on several boards in some of the most popular spaces to innovate, including everything from AI to mobile dentistry. Right? A couple of those IPOs are mine. One of those is actually mine, is Oscar Health Insurance, which I worked at before Quip IPO'd about a month ago. Dave is our CFO, other general partner, and is a finance guy. He has spent the last roughly 15 years in the finance world, about 10 of those years at Bridgewater Associates, the global macro hedge fund based out of Connecticut. He spent a couple of years at a dental startup where we met, and then a couple of years at a pre-IPO real estate startup. As Kinor mentioned, we've built a team of nearly 30 now, and we involve them in our day-to-day operations. They're incredibly important to what we do. We have a venture partner level, and we have with roughly 5 to 7, and then we have an advisor level with roughly 20 in it. So as a general overview, if you're not already convinced, I'll spend the next several slides trying to convince you that there's a lot of innovation that goes on in oral health, right? But there is, less than ideal capital flow. This space has suffered from restricted capital flow for a long time, right? So our thesis is really three-pronged. Prong number one is we want to provide capital access. We're a fund, right? We're going to write checks. We want to be thought of as an active investor, strategic investor, institutional thought leader, right, in the space. What we are not is a service provider, right? We're not an incubator, an accelerator, or a venture studio. The second part of our thesis is that we want to provide industry access. It actually risk mitigates investments, in a significant way if these startups are ready for big conversations and be able to connect directly to decision makers with some of those big players in the space, right? I call them, the quote unquote big eight, right? Meaning at some point in time, these startups want to connect with, number one, big manufacturers, distributors, insurers, DSOs, right? They want to connect with academic institutions. They want to connect with professional associations, the big labs, with retailers, right? The list goes on. They really want to connect deeply with the decision makers in this industry. And so they need help, right? And then third, the last part of our thesis is insights. Dave and I come from highly analytical backgrounds. In addition to that, we did a lot of research prior to founding this fund. And we want to be able to pass that along to the industry. We realize that this is territory unknown to the industry, right? We know how to invest in building a dental practice or even building multiple dental practices, right? But investing in the tech side of the industry is really, it's a different type of investment. And so, we're sitting in a position where we've done a lot of research and are continuing to do so on these types of transactions where we are seeing trends because these companies are actively pitching, right? We want to report that back and through, education and awareness, really elevate this side of the industry. This is just a little bit of timeline. Dave and I met nearly 2 years ago or so now. When we were working at a dental startup together, I was on the board, Dave was a CFO. We created a significant value with that company. We took it from about $5 to $50 million. So we realized we could create value together, but we got frustrated, again and again when it came to fundraising and hearing that, we had to masquerade ourselves as something else, right? We're not a dental company, we're a logistics platform. We're a tech company, because dental company wasn't enough. So Dave and I set off to do a lot of research. It ended up taking us about 18 to 20 months. We were able to prove out the strong return profile on these types of investments. And then we decided to start a fund, and we chose the angel list rolling fund structure for our fund. Now, many of you are from the dental industry, so I need not spend too much time here, but suffice it to say, we looked at the problems in this industry from multiple different perspectives. Investors are typically concentrated in tech and consumer products, right? The industry itself has tons of innovation, but less than ideal capital flow, right? Startups are interesting. During COVID, some of them pivoted, some of them went into hibernation, some of them struggled or failed. Right? Depending on exactly what the startup did, it was a really difficult time for everybody. Right? Meanwhile, you have this, this early exit of clinicians, right? And therefore the growth of consolidated or organized dentistry, right? And the growth of DSOs, right? And with patients and practices, it's interesting, right? Providers tend to over-index on clinical, right? Products, services, techniques, right? We attend a lot of CE. We continue to learn how better we can treat our patients, right? But we all know well that, at least 50% of that job in the practice is business, right? How to run the business. And so there we tend to rely a lot as providers on technology to help run our business, right? So the solution was to create one safe space, right? One platform for investors from inside of the space as well as from outside of the space to be able to invest in a safe way, right? From the, with the guidance of general partners and venture partners who have made money in this space, who have invested money in this space, who have managed money in this space. So you can start to dip your toe or your foot or your ankle into what it's like to invest in dental tech. And we work closely with the American Dental Association and their Health Policy Institute. These are numbers largely sourced from their annual report prior to COVID. But there's a lot of dental spending in the US at least, right? And in other countries, of course, as well. Right? The US sees about $180 to $200 billion worth of spending just on dental care. That does not count the software, the product side of the industry at all, which accounts for about 3.7 to 4% of healthcare spending in the US, right? So just to put that in context with other countries, that's a lot of money. Right? Insurance usage, is difficult. There's some interesting numbers here that compare it to medical, right? Where you have just about a half in oral care, a hair under half of people who are funded privately, and a hair under half of people who, pay out of pocket, right? Especially because a lot of people lost their jobs during COVID. Experientially, right, I think it leaves a lot to be desired. It's not, it's not really a consumer-ready product. And on the other side of the equation, practically speaking, we often put treatment plans and individual procedures in front of patients that are well over $2,500, right? Whereas the typical policy coverages are between $1,500 and $2,500 US dollars, right? So practically speaking, it's not sustainable for people to have real coverage there, right? They can have one procedure or two procedures done, but their treatment plan has a lot of procedures that need to be done. There has been a decline in solo practices. Right, we see due to COVID, we've had so many great clinicians exit early, right? Because they just financially cannot sustain it, or from a health perspective, early on they were worried, right? So you have this rise of the DSO. It's about 25-26% consolidated in the U.S. right now. Right? Restorative versus preventative dentistry is interesting. Over the last 16, 17, 18 years, actually restorative dentistry has been decreasing. We're becoming a little bit less of a reactive system and a little bit more of a preventative one, which is increasing. But we're not increasing preventative enough yet, right? We need to do more there. So our research. Dave and I first went off, right, because we're very analytical. Before we started a fund, we wanted to understand what is the opportunity here quantitatively. Are these transactions? I mean, we had gut feelings. We knew from our own investments, right? But on the average, how do these investments perform? So we went off to look at the pitch books and the known databases of the world. Lo and behold, there was not good information to be found. Right? There was very limited information. There was some inaccurate information, not enough to be able to say, let's do something here. So Dave and I went to every investor that we knew and our team knew. We went to every startup that we knew and our team knew. We ended up initially, being able to get in touch with and collaborate with about 300 companies. And what we did is we asked them for aggregated and anonymized information. We devised a way for them to safely give us information. And by information, I mean, there was essentially day X, there was an investment of a certain size, evaluation of a certain size. Day Y, there was either another investment at a different valuation or a liquidation event, an IPO or an acquisition, right? So about 300 companies, roughly 600 transactions initially tracked, and we wrote a long form publishable paper. And in addition to, and you can request that paper or access to that paper, the short version on our website at reverepartnersvc.com. We then continue to track. We have about 500, 600 real companies tracked now, about 1,000, 1,200 transactions, right? So largest database of its kind. Dave and I did not intend on going off on an 18 to 20 month journey to build the database to do the research. We thought the database pre-existed, but we're glad we did it. And now it's a one-of-a-kind database that we're going to continue to build, right? We asked ourselves a few key questions. One of those questions was, what percentage of venture capital deals are healthcare inclusive of oral care, and is that increasing year over year? And the answer is it's about 8% of all VC deals are healthcare, and it is increasing more or less depending on the years. So 2014 and 2016, very steeply increasing. Other years it levels off, but it is generally going up and to the right. The next question was, relative to the market size, how well are we investing in or under investing in the startups in our space? We looked at oral care compared to medical devices, healthcare services, healthcare software, because oral care has each of those subdomains, right? If you look at this chart, you can see that tiny green sliver next to oral care, meaning we're way under investing in oral care, right? In other words, medical devices are multiple fold more invested in than all of the startups combined in oral care, right? The next question we asked ourselves was, if an investor is going to put $1 on a dental investment, where should they invest it? Should it be on dental VC? These like I'm talking about, early stage tech, product and service software companies, Or should it be a public dental equity, or, Shines, Colgate, P&G, what have you? Should it be private equity's practice consolidation model? Should it be private equity's late stage product acquisition model? Should it be, building a single practice? Right. And on a strictly annual return basis, dental VC way outperforms, about 33% IRR, right? Maybe even a hair higher. But you're inherently making higher risk investments, so you're likely to get higher rewards there. So in the chart on the lower right, we use the Sharpe ratio to risk adjust, right? When you do that, the two PE buckets especially come way up, right? They're proven long-term, well-known, well-studied investments. However, right, dental VC still outperforms that by a little bit. And on top of it, right, if you look from a competitive perspective, just in PE's practice consolidation model, you have over 80 PE firms, right? In dental VC, there are very, very few to none, right? Really playing in that space in a committed way, right? Like Revere Partners is. So what does it all mean, right? Combining the strong return profile and the historically underinvested in space, we started to think about our methodology. We want to partner with these startups early. That's largely what I've been doing with my Barchester Bay group for years now, right? We want to invest. And when we invest, right, we can really differentiate ourselves from other VCs that dabble in this space or even enter this space because of the database that we've built, right? Simply put, right, these conversations fall apart for dental startups in at least one of two ways. Here are a couple of examples. One example would be, the dental or the VC looking to make a dental investment says, well, look, you do payments, so you're a fintech company, and fintech companies, typically result in 15x EBITDA, right? And the dental entrepreneur says, look, we do payments. We are in essence, a fintech company, but your 15x EBITDA is from financial services. It's not adjusted for oral care, right? And then kind of poof, the conversation falls apart. The second way it falls apart is, the VC comes back and says, we loved your pitch, but unfortunately, we had our analysts do some work. The dental industry's, TAM and SAM, total addressable market, is just too small for us to invest in, right? Poof, conversation falls apart. What they're missing in both cases, right, is the average amount of time it takes to get to the average return profile for different types of dental startups with significant data to back that, right? And we now have that data. There's no shortage of recent activity in this space. There are many transactions that occur, right? Level, Series A, Beam, CareStack, Grin 10. These ones are extremely recent, right? You have Medento being acquired by Dental Intelligence. You have Henry the Dentist acquired by Onsite Dental. There are many, many transactions that occur in this space. There's no lack of activity. We looked at the data to try to determine where are LPs investing and where are they doing well. This is by no means a comprehensive list by any means, but you have at least four major buckets that emerged. Tech and diagnostics, things like AI and digitizing our supply chain, right? Think, do dental offices need to order out of a paper manual? Do they need to have a rep on site, right? Dental services and biotech. Infection control is top of everybody's mind. Mobile dentistry, ortho and aligners, right? Both the 3D printers and the implantables, right? Salivary and biomarker platforms. I think the company Bristol was accepted to Y Combinator, right? Consumer brands. We do need to listen to what consumers want, right? And so there are these upmarket premium products and ways that we can meet consumer demands while still accomplishing the clinical goals we have as providers. That's largely what I did at Quip. The payments and reimbursement space, right? Due to some of the shortfallings of the coverage that we have on the insurance side, sometimes we need new payment solutions, right? Frankly, we need revenue cycle management overhaul in this space. There's no reason why we can't have text and email invoices, right? Soft credit checks, 0% merchant fees, automated payment plans. These things are in every industry, right? They're mainstays of 2021. When I look in my practice at that front desk, people are paying by their phone, right? The first thing they do when you say, John Smith, you owe $325 for today, is they pull out their phone. They want to touch, they want to text, they want to tap, right? Google Pay, Apple Wallet. They don't want to pay less and less by card, certainly not any paper form of money, right? So we need to have technology mitigate the gap between providers who, it's hard for us to step out of our workflow sometimes, and consumers who have consumer demands because of what they're experiencing in other verticals. We also looked at the data to best determine our investment strategy. How should we deploy capital, right? We decided ultimately, looking at the data, that a 2-to-1 Series A to seed stage investment is vital, right? These seed stage companies are validating their products, right? They're coming out with new products or services that they want testing on, that they want feedback on, that they want to figure out how to first determine their revenue streams. These Series A companies are growth stage companies. They have recurring revenue, right? They are looking to grow their product and engineering teams, their sales, their marketing. They're putting out their next new service, right? We have some allotments saved for special opportunities. What we mean by that is pre-seed stage startups or innovation competitions that result in funding, follow-on investments. We know that we're going to get some really good terms in Series A rounds, for example, and to be a part of the follow-on investments. And so we want to be a part of the Series Bs or Cs that are for the winners. Our fund structure. So here's where things get really interesting. We tried to determine what fund structure we should be. Should we be a traditional VC fund? Should we be some sort of pledge fund or membership model? And we ultimately landed on this rolling fund structure. AngelList is a well-known and reputable platform. It's sort of a two-sided platform. There's a lot of startups on one side. There are many investors on the other side. And they've produced these fund administration products, a traditional VC fund administration product, a syndicate administration product, and a rolling fund administration product. We were lucky and honored to become an AngelList rolling fund. It is not, certainly not an easy process, but one where I think both sides saw the mutual opportunity that we have in the oral care space and the work we've done with our research, right? So what is it? It's a cutting edge subscription model for investing. What do I mean by that? Every quarter, AngelList essentially helps us put out a fund, right? A small fund each quarter. And investors can contribute on a quarterly basis, just like you might subscribe for your toothbrush heads or your razor blades or any other subscription you might have, right? So let me play that out for you. If you said, Jeremy, I love this concept for the sake of round numbers, right? I want to invest, $1 million. In a traditional VC fund, what would happen is the general partners would have to raise money for 6 to 12 months, right? They would have to close their fund, after their raise period was complete. They would call all of their capital at once. They'd probably invest your money in 1 or 2 deals because they tend to raise a lot more money, right? So your money is not necessarily so diversified. They probably have to invest it by a certain date, right? Because they have mandates, meaning they sometimes have this pressure to get involved in hasty deals, right? In the rolling fund structure, what's going to happen is different, right? I'm going to say, you know what? Let's take that $1 million and split it up $100,000 a quarter for 10 quarters, right? So you can pay over time instead of all at once. I'm going to make a couple, 2 to 3, 4 investments per quarter. So I'm going to spread it. You're going to get the pro rata share of each of those. So I'm going to spread your risk across multiple companies, right? And I can better, as the general partner, match supply and demand, right? If a particular quarter comes about where we need less capital, we can take less capital, right? So I don't have this pressure to be involved in hasty deals. As an administrator, AngelList is excellent. They're best in class. They do all the valuation, legal, tax, compliance, reporting. So the general partners and the venture partner team, the advisor team, can be really solely focused on the investor fundraising and relations, as well as the startup sourcing and diligence. That's exactly where our heads should be. Okay. From a cost structure perspective, we're very, very investor friendly here. That first bullet point essentially means that we have to return all of an investor's retrospective subscriptions, the money they've already given us, all of their prospective subscriptions, the money they've signed up to give us, and they need to make a profit before the general partners charge carried interest. Backing subscribers participate only in distributions from the quarterly funds to which they contributed. Right? Meaning if you're a part of quarter 1, 2, 3, 4 fund, but you're not part of the 5th quarter fund, of course, you're not going to see the upside of the startups we invested in the 5th quarter. After the initial term, which is 4 quarters, an investor can increase, decrease, or stay the same, right? So it's meant to be, and no penalty, right? It's meant to be, ultimately flexible to anybody that gets involved. So in terms of our, the fund details, we are raising a $50 million fund. And that means that we will invest in 2 to 3 deals a quarter, putting in about $1 million to $1.5 million in a particular startup, which means we can take an entire seed round or lead a Series A round. It's a really nice position to be in terms of interest in a startup. Okay. The way rolling fund gets its name is when you do not have committed capital in a particular deployed in a particular quarter, you can roll it over to the next quarter. Meaning, if the quarter one fund has $4 million in it and we write $3 million of checks, we can take that 1 million and roll it over to the second quarter, and we can give all of the investors from quarter one their pro rata share of the quarter two investments. Hey, again, instead of getting involved in hasty deals. The fee structure is highly conservative with traditional VC. It's called 2 and 20, 2% management fee, 20% carried interest. Okay. And then AngelList takes a small fee amortized over 10 years for managing the capital, which we think is more than reasonable. On average, our angel investors have invested about $25,000 a quarter for 4 quarters. On average, our high net worth individuals have invested about $50,000 a quarter for 5 quarters. And on average, our family offices have invested between about $500,000 and $3 million. Now, our general partners have discretion over these numbers. Okay? Those are just the average numbers. Okay? So we try to work with everybody. And in addition to that, we work with a lot of what we call accredited investors as part of that angel group, meaning dentists, right? This fund is by doctors for doctors, or by the industry for the industry. So we're really trying to involve everybody who wants to uplift this side of the industry. Another common feature here is that we have a lot of flexibility over working with international investors, as well as making investments in internationally based startups. So we can certainly accommodate both. Okay. And last but not least, if investors want to have a greater investment in a particular company that we're investing in, then they can. We have the option to open up a syndicate or a sidecar to the fund, and investors can put in more capital to a particular startup that we have a greater allotment in. Okay. If we do that, we scrap the management fee and we cut the carried interest down to 10%. We really want to incentivize that type of excitement and that type of investment in companies that we're involved in. So I want to thank everybody for listening. If you have any questions at all, feel free to visit our website, reverepartnersvc.com. You can also ask any questions to info@reverepartnersvc.com, or my personal email is just jeremy@reverepartnersvc.com.
Jeremy, that was a great presentation. Thank you. A couple of questions I had. You brought up the international scenario for our colleagues that are internationally interested in getting involved. How does that work?
Yeah, so everybody invests really in the same platform, and I think you might have the website up, and you can get it from our website too. But you invest on AngelList, right? It involves a very simple, set up your profile and answer a couple questions, and then you can invest and manage your investment. Every country is slightly different, so I want to take some caution here. But essentially, and generally speaking, what happens is it subscribes to the same, laws that your home country has on things like capital gains or, wealth taxes. Now, if you have any questions, you'll certainly want to, check with your own financial advisor, your own accountant, your own attorney. But we work with a lot of different, investors from many, many, many different countries. And we do make investments in companies that are internationally based as well. So it's really, very simple. I think you'll find through AngelList a very simple and straightforward process.
Excellent. Excellent. So Doc, what is your core interest? What sort of projects are the core interests of the fund? I mean, you're very broad in terms of covering technology, products, services. What's your sweet spot?
Yeah, I think I get that question a lot, and it's a tough one, especially given that there's been no institutional investor in this space. So we're getting everything thrown at us, right? We have a queue of some 120 to 150 startups. We've probably diligenced about 30 of them so far. So we've got this significant path, and we've done, to date, very little market. This is mainly from word of mouth. And throughout May and June, you'll see us do a lot more in terms of PR and marketing. But I think early on it's important for a fund to really prove its value to its LPs, its investors, right? In order to do that, we need to look for companies that we think are going to aggressively, pursue returns, right? Meaning they're gonna jump their company's valuations in very short periods of time. So companies that tend to fall into those categories, often are, hit one of two major buckets. Number one, they're things that just scale quickly at low cost. So that generally speaks directly to software, for example, is a big one. The other area is, so right, software. Think things like digitizing your front desk, right, with all these services like live chat and scheduling and telehealth and payments, right? All these kind of digital solutions. The other thing, or AI, right? For example, the other thing is just areas that are explosive growth areas of a particular field. AI is another, it kind of fits that bucket as well. Mobile dentistry has really been big. Infection control right now because of the pandemic, and I think biomarkers, right? Just to name a few, right, are these kind of areas of explosive growth. They're just on this trajectory and this exponential curve that is relatively hard to to compete with. So I think those are some of them, but I want to be careful and clear to say that there is not a single company that has an oral care application that we do not look at and consider strongly. We are open to all ventures in that have a relation to oral health or oral systemic health links. But generally speaking, especially early on in the fund, of course, we're going to put an emphasis on companies that we really think are going to sprint in the next 4, 5, 6 quarters.
Okay, that's very excellent. And for our senior colleagues that want to become the LPs, the investors, how do they go about doing that? And what kind of return can they expect?
Yeah, so I think both good questions. So the way that you would become an investor is you reach out, right? And certainly we can answer any additional questions you might have. So you can email that info@reverepartnersvc.com, or again, you can reach me directly at jeremy@reverepartnersvc.com. And we can talk. If you're ready to go right away, you can visit our our AngelList page. You'll find Revere Partners RF for Rolling Fund on the AngelList Ventures page, and you can invest directly there, or come to us first, and we can help you get there. So that's how you invest. In terms of return, it's one of those tough questions because it depends a little bit on the types of companies in a particular quarter. But on what our data shows is, on the average, it takes about 4.8 to 5 years to reach about a 5 to 5.2x return. Right. So, suffice it to say, it's not an investment that, is necessarily going to turn around, with the volatility like a stock market, with big gains and big losses and, potentially very, very short periods of time. Right. But it's also not an investment, like life insurance or something like that, that takes, decades to return to you. Right. This is typically something that if you put in, $100,000 today, you hope to see $400,000, $500,000, $600,000 in about 5 years. Right.
Well, 4 or 5 years, 20% and per annum. That's really good, because normally, we're happy with our 6-7% returns that we get if we get that in different safe and then in the label. A lot of doctors, it's a great thing to be able to, and for a doctor to invest in another doctor to benefit from at the other end, and have the monitoring in the process supported by doctors. It's a lovely situation. That's wonderful. So how about products, small products and services? You said you do seed rounds. That would be a good situation. How do you get somebody that's in a seed round to get up and running as fast as you need them to within the first 5 years?
Yeah. So, in seed rounds, we're more often selected, I think, to, first of all, have a board seat or have board observer rights. That gives us, just a greater touch point for one of our venture partners or one of our advisors to be working with the company a little bit more closely and help guide them. And we have a pretty large team of about 30 of really well-known people around the industry, and, have strong track records, and, I think are really good fits for those types of roles. That's a primary way that we kind of work, closely with companies to do it. We also, help them get ready for conversations and connect them to the big players, that they need to connect with in the industry in order to get there, right? So if they're this early company that's trying to, and one of their main sales channels, for example, let's just say is, working with a big distributor, then they need to understand, right, from the distributor, what does it take, what milestones do they need to hit to be carried by the distributor initially, and then, and what to expect in terms of margins, and what to expect in terms of how to scale it and really grow it, right, rather than make, kind of rash assumptions. And so we make sure that they're connected at the right time during that life cycle, with that big industry stakeholder, to really make sure that they're tracking towards reasonable milestones, and that the stakeholder has eyes on this particular company. So those are a couple ways that we that we work with them to help them get up and going, in addition to infusing capital, of course.
Wow, very lovely. It's a very comprehensive package that comes with this, and we look forward to routing and letting you know of our colleagues that have innovations and ideas and concepts, or have businesses that are up and running that benefit other dental care providers. Now, the reason you'll find on the site here in the comment section a link for the CE for this session. And the reason we're issuing CE for this session is because dentistry and medicine and healthcare is not just about clinical expertise, but it's also about your business acumen. Half of the equation relates to business. So if you have learnings that you can gain from leaders like Dr. Krell and other business-minded folks, we're very interested that you bring your products, services, concepts, and ideas to the show so we can maximize the collaboration between doctors. Jeremy, some final words to our most of our viewership are younger doctors that are looking for ways to they get bombarded with advertisements, with different contentions that every doctor has in a certain process. It's very hard at times to select the right thing. What would be your final message to our colleagues there?
Yeah, look, I really mean when I say that this is by the industry for the industry, right? So no deal is kind of too small or too big for us to talk about, right? It's a conversation, right? No check size for an investor, is too small or too big for us to talk about. If you want to help out, let's find a way to get you to help out, right? So I just don't hold back, right? If you want to be a part of this from a funding standpoint, if you want to be a part of this from, because you think you have a great startup or great idea, come to us, right? If we can't, accommodate you right now, I'm more than confident that we can connect you with, someone or a resource that can, and I think, more times than not, I think we really can collaborate with you, right? Because we need it. I think this is, and maybe one of my, my favorite common terms, right, with this is, it isn't going to take one person. This is an enormous, sort of, right? It's like not just lifting a rock, it's lifting a continent, right? It's going to take a village, right? We need people from all around this industry to help us, right? That's each of you with your eyes and ears, in different angles, right? Seeing a new thing from a different perspective. So we are very, very, very open. Please feel free to use this as a sounding board. Please connect with us. I think that's how we grow, and how we ultimately gain endorsement. And we're going to earn. We realize we're going to have to earn it in this industry, and we're cut out for the hard work. And I think you're going to see us put that in.
Really commend you on what you have done. The industry will support your concept, because I know countless doctors that have projects that they're looking for and they don't know where to go, and they don't need to go anywhere further, because you have this wonderful solution that's operated for the industry, by the industry. The problem we have in our industry is that we're isolated. We're in our practices. We all do lead similar lives. We have families often, and face the same challenges throughout our daily lives. But and a lot of third parties like insurance companies, if you're in groups now, you see it all the time. Doctors are sort of tired and fed up with the games that are being played with at the insurance level. That's the most common one. And these groups, for example, started in the back of a grocery store. Now they're dictating treatment planning and diagnosis indirectly at times. And people are frustrated with it. But these type of solutions by doctors will eventually change that. Because if you want to disrupt an industry, you have to have innovation. It's not about fighting the insurance companies. They have a lot more money than we have. They're not coordinated. You're not organized like they are. But you create innovations and other concepts such as this that will make those models obsolete in time. Dr. Krell, again, I commend you for everything you have done. It's amazing. This is the first you have ever seen. And it's very motivating and stimulating to step into your shoes and create more of these type of projects. And for all of our colleagues, do not hesitate to contact Dr. Krell. Some of you will find your time spent there very of high value. And with that said, we would love to have you back on the show, maybe later this year or next year, to give us an update on how the fund is growing and what you have accomplished in terms of funded projects. We'd love to have you back on the show, Dr. Krell.
Thank you, Kunar, and thank you everybody for listening. I really appreciate it. An honor to be here.
Thank you for spending this time on Sunday, and wish you a great remainder of the weekend of what's left of it. Thank you so much. Have a nice day, Dr. Krell.
You too.